Hi, my name is Dion Pouncil. I'm the principal and CIO of Hybrid Advisors, and you're watching Taking Stock.
Markets off their session lows here on this trading Tuesday, but markets taking a bit of a downturn, not necessarily liking everything that Jerome Powell, the chairman of the Federal Reserve, had to say. We'll get to that in just a moment. Welcome to the broadcast, one and all. This is Taking Stock. I'm your host today, JD Durkin, just moments away, mere moments from the ringing of the iconic closing bell right here at the New York Stock Exchange. And right now, for this particular show, folks, let's jump right in. My good friend Jay Woods of Freedom Capital Markets and a CNBC contributor here to make sense of what did we hear from Jerome Powell that investors in the indexes weren't too keen about today, Jay.
Well, he gave us, we're going to go back to each data point, but he said the market is fairly valued right now, and that got a little nervousness in this market. We've been looking for a reason to sell off. We've been slowly chugging along, making new highs every single day. So historically, seasonally, the last 2 weeks of September, first 2 weeks of October are the weakest points on the calendar if you go by the Stock Traders Almanac, which I tend to look at very, very frequently. So this pullback, while we don't like it, it's not too bad, but Powell basically telling us we may be done or we're going to just wait for the next data point. But now we're going to throw it back to you.
Hey, I can't see. That's a little bit of a preview of the things that come. Hang tight, Jay. We're going to take the closing bell here. The team from Resolute Holdings, ticker symbol RHLD, here at the New York Stock Exchange to do the honors. The tail of the tape here on this Trading Tuesday. Despite gains in positive territory to kick off the session, Jerome Powell started to speak. And as Jay Woods was just saying in markets, they love Jay Woods, not always thrilled with what Jay Powell has to say. The S&P 500 finishing down 0.5%. The Dow 30 components down fractionally as well. And the small caps, remember, had that big high last week of 2.5%, now settling down about 0.2% on the trading session as well. Jay, let me bring it back in. That was the big quote from Jay Powell today. He said, we do look at overall financial conditions. We ask ourselves whether our policies are affecting those conditions. By many measures, equity prices are fairly highly valued. He's very strategic with his words.
Yeah, it wasn't quite irrational exuberance going back to the Alan Greenspan days, where when he said that, the market doubled in the next 3 years. But fairly highly valued, it was very odd to hear him say that, but he says the market's doing well, and if it pulls back, okay, fine. But he did stress the dual mandate, and the dual mandate being inflationary concerns and unemployment. Now, unemployment is the side, as they try to balance it, that's getting a little skewed, and they're focused on that. That's why they cut rates. Now, if inflation ticks up, which he says still uncertainty there, then they may have to revisit if they have to cut again. But right now, he didn't say we're not done cutting. He didn't say we are, but he didn't say enough to get this rally to continue, and that's what we're focused on right now.
Jay, let me ask you about one of the top stocks that has been making headlines the last few days. That is Kenvue. In and of itself, may not really be a household name, but that core product, Tylenol, certainly is. You and I taking a look at the stock chart before we came live.
Oh, yeah.
What have you been seeing in terms of the selling related to the broader Tylenol-related news?
Well, that is a household name. We just don't know it. Listerine, J&J, no more tears. The baby shampoo, and Band-Aids, of course. But it got hit. Tylenol makes up about 8 to 9% of the total revenue for Kenvue. And when that was announced that the Trump administration was going to link them to autism, a lot of people panicked, and we've seen this company, when they were Johnson & Johnson before they spun off, have troubles. Remember J&J baby powder and the cancer scare? The stock sold off over 13 days, roughly 20%. We're now 12 days into this announcement saying that they may link Tylenol to autism. We sold off 18%. I think a long-term investor needs to use this as a buying opportunity. There is no scientific link. Tylenol is pushing back right now, and the subset of it overall very small compared to the overall asset of Kenvue themselves. The dividend pays now 4.9%. So for a long-term investor looking for a buying opportunity, I think this may have been it. Not the way you want to get one, but it's definitely something that I think that people should be looking into for a long-term play.
What would you say are some of the key catalysts you will be paying attention to give us some sense for the make or break moments of this market? It's data dependent.
Yeah.
We got jobless claims, we got PCE Friday. What else are you on the lookout for?
Okay, so you got jobless claims. That's every Thursday we get that. But those jobless claims ticked up above 250,000 2 weeks ago, got back under that number. Watch to see 250. That's the key metric. We're supposed to be under that. That is the unemployment side of things. And then, of course, that PCE. The PCE number, the preferred inflation gauge for the Fed, that number is supposed to be at 2.9%. We don't expect that to be skewed too far from that. So if it does come in cooler, that would be great. If it comes in hotter, then the inflation side of things will get a little, little testy down here. And then earnings. Micron comes out today after the bell. Watch them in the semi space. That stock's had a tremendous run going to earnings. Can it continue like an Oracle did after they reported? Or is it going to sell off on good earnings? We'll find out in a few minutes.
I'm about out of time with you, but the Mag 7 yesterday making headlines. Apple finally getting back into positive territory year to date, but I looked at Amazon today. It's kind of like right there. What do you make of it?
I love my Amazon. Apple Watch 260, that's the key level to watch there. It's finally up for the year, 2%. The iPhone 17 launch went better than anticipated. That's good, but are they innovating? We have yet to see that. So if Apple can get above 260, I love it. Amazon pulling back a little bit, now the worst performer of the Mag 7, only up 1.2% for the year. But the good news is we're rotating among those big names. That's positive for the market. So for me, these magnificent 7 names, all being up, all starting to finish this year strong, very positive for the market.
All right, speaking of finish year strong, that's exactly what I'm hoping for as a New York Giants football fan. Now that we got Jackson Dare, I don't know what's going to happen, but that's why we play the game.
Yeah, and finishing strong. Look what my Eagles did. Blocked the field goal to end the game. Finishing strong, 3-0, so it's good. Jackson Dart era, good luck to your Giants. It's going to be fascinating to watch.
Man, and thank you for being here. The great Jay Woods of
Anytime.
Freedom Capital Markets and a CNBC contributor, kicking things off here on the broadcast. Jeremy's going to take your mic. Todd, you and I are going to go for a walk, my man. Thank you to the great Jay Woods for getting us kicked off here. You're walking too? That's good, because he's got the other part of my microphone part. All right, Todd, today we're going to take a look. Pardon me, folks, we're going to squeeze right by you here while we do our live broadcast for the show for Taking Stock. All right, Todd, let's take a look at a few of the kind of household names here at the New York Stock Exchange with a lot of news attached to them. We'll start with the semiconductor giant. Shares of Taiwan Semi here, up 3.7% in the session, getting a boost to all-time highs on NVIDIA's OpenAI announcement. Citi analysts saying this company is still expected to be the primary foundry for NVIDIA and Intel. The stock is up 25% month to date and up more than 125% off of its April 7th lows. Todd, we'll take a look over this way now at shares of Oracle. Jay Woods and I were just talking about Oracle. It's had a great run. Not so much the tail of the tape today, though, down 4.3% despite a price hike from Morgan Stanley of $320. A bit of profit taking on the day. The average one-year price target for this stock sits at $341 a share. Last week, our very own Ashley Mastronardi caught up one-on-one with Global Blockchain Business Council CEO Sandra Rowe. That interview happened at Money 2020 Middle East in Riyadh. Take a look.
Welcome back to NYSE Live. While the Fed is creating buzz here on Wall Street, the fintech industry is making plenty of noise in Saudi Arabia. More than 1,000 investors and 450 speakers are at this year's Money 2020 Middle East event in Riyadh, Saudi Arabia, with a mission of shaping what's next for money, finance, and tech. Joining me now is Sandra Rowe. She is the CEO of the Global Blockchain Business Council. Sandra, welcome to the show.
Hi, thank you so much for having me.
Sandra, what are the biggest storylines you've been following on the ground in Saudi Arabia?
Well, it's absolutely a buzz about innovation, but I want to point out 3 main sort of thread lines I've been following. Number 1 is related to digital payments, stable coins, especially how it aligns with traditional finance and foreign exchange markets. How will we fit all of this in together? Number 2 has been obviously around AI and its implications for financial services. There's a lot around AI agents. And then third, which may not be as obvious, but it's been really inspiring for me, is really focusing on what the young people are doing in Saudi Arabia. And I had a chance to meet with a blockchain developer who just inspired me on so much of what's going on amongst the young people here.
All right, and earlier today you delivered a presentation about blockchain's new global playbook. What did you want attendees to take away from it?
Well, firstly, the global blockchain playbook is truly global. There is blockchain happening all over the world, but it's local. When you get down to the local level, you do have to look at what are the emphasis points. Some of it's tokenization. Some folks are talking about stable coins. And here, particularly on the ground in Saudi Arabia, I am hearing quite a bit about tokenization of financial products, as well as real estate, and also stable coin.
All right, and I understand, Sandra, that you are a proponent of human-centric technology. Can you explain for us what that means?
Absolutely, super simple. What is the problem that we are solving, and how can we use technology to actually solve those big problems? And I know there's often criticism around blockchain is looking, for a problem, but now I think we've truly found use cases that are supporting financial services industry, and the killer app at the moment happens to be stablecoin, but there's much more behind that.
Sandra, you started your career in investment banking and you've pivoted into blockchain. What are some of the correlations you've noticed between the financial world and blockchain?
Well, the simple word I like to use is convergence. We are now seeing financial services converge with blockchain technology and as the next generation underpinning of a lot of what will be future digital financial products.
Let's do it, folks. Welcome back to the broadcast. Time now for the latest in the worlds of fintech, crypto, and AI-related headlines for your Trading Tuesday. First up, the crypto majors, both down about 1% in the session. Comparable story for BTC as well as for Ethereum. Next up, SEC Chair Paul Atkins says he plans to roll out an innovation exemption by year's end in order to better fast-track new crypto products to market, part of his push to modernize digital asset rules. And finally, at this hour, Meta pouring tens of millions into a new super PAC, the American Technology Excellence Project, it's called, in order to fight state-level AI regulations and back tech-friendly candidates in next year's elections. That is the latest you need to know. Let's bring in our next guest at this hour. Hisham El-Falih is the CEO and co-founder at Lean Technologies. Very exciting to say Hisham himself joins us here on the trading floor of the New York Stock Exchange. Welcome. It's great to have you here.
Thanks, JD. Good to be here.
Of course. Let's start with a bit of an introduction to your work at Lean Technologies for anyone a bit familiar and how you fit into your broader fintech-related space.
Yeah, absolutely. So Lean is a Saudi and UAE-based fintech company. We're about 6 years old now. We focus on enabling fintech companies, merchants, lending companies, super apps to access their customers' bank accounts. And then, from that they can retrieve pertinent financial data, they can initiate account-to-account transactions. And so you can think of us as an enabler in the fintech renaissance that's happening in the Middle East.
And would you say you mostly put a focus on the Middle East and North African region, scales globally? Yeah. And what does that kind of geographic component and focus look like for you in the company?
Yeah, absolutely. So JD, I actually went to Stanford, and I, as cliche as it sounds, built this company with my Stanford roommate. We both grew up in the region, and we both feel a deep, fond, loyalty to helping the region grow. When we started in 2019, fintech was barely scratching the surface in terms of penetration. Nowadays, it's one of the most vibrant fintech ecosystems in the world, and I think that's a lot of thanks to the central banks in the region helping grow that, that ecosystem.
What should people know about the general landscape in the Middle East and North Africa for people who may, for a long time, heard that's could one day be a good place, a good opportunity, an emerging market to invest, and now it just seems like it is tantamount, it is core to so many global portfolios.
Yeah, no, absolutely. You're right on the point there. The MENA region has one of the youngest populations in the world, 70% under the age of 30, if you can believe that. One of the highest digital penetrations as well, smartphone penetration through the roof, but other digital penetration as well. And so what's happened in the last few years is central banks have basically looked at this and said, okay, there's obviously a lot of demand for fintech, but not a lot of supply. Let's lay the groundwork with forward-thinking regulation, sandboxes, and frameworks such as open banking, buy now, pay later, etc., to help grow this ecosystem. And so what's emerged now is actually one of the most rapidly growing fintech landscapes. We've seen almost $2 billion invested in venture this half in 2025. More than 57% of that went into fintech. And so it's playing a big role, and I think there's a lot more to come in the future. Just to give you one stat, fintech revenue as a proportion of banking revenue in the region is 1%, according to McKinsey. In the US, it's about 5%. So we still have a lot more growth, I'd say, in terms of fintech's contribution to the GDP and to the economy.
Yeah, we talk a lot about regulatory and the broader regulation landscape here in the United States. What does policy look like for other countries around the world to allow the pathway for success for fintech giants like yours?
I mean, there's obviously a lot of talk about virtual assets and stable coins and crypto. It's the talk of the town around the world right now, especially with what's happened with the Genius Act in the US and MiCA in Europe. I think that will obviously follow suit around emerging markets. I think what's happening right now, though, is regulators like SAMA in Saudi and the Central Bank of the UAE are really thinking about how do we balance innovation while also ensuring that we have a resilient and stable ecosystem. And that's always been paramount to them as they're introducing new regulations that help customers but also maintain stability. And I think that's what has allowed the region to grow in such a rapid way, in a very healthy way as well.
Yeah, you talk about growth. Sometimes you sit there with an emerging industry and you say, we've grown so much, we can't possibly imagine what comes next. But the space and spirit of fintech inevitably will continue to grow.
Absolutely.
Why do you feel Lean is uniquely situated to take advantage of that ongoing growth, even in just the next year or two?
Yeah. Right place, right time. We started at a time where fintech wasn't really penetrating, and now there's obviously demand from all sorts of industries, all sorts of players around the region. We're seeing amazing investors coming into the region. So, General Catalyst led our Series B last year. For the first time in Saudi Arabia, they invested. Bain Capital Ventures, Human Capital, Sequoia India. The list goes on and on. Just last week, TPG announced a massive round into Hella. And so you're seeing all this amazing, investor sentiment coming in. You're seeing massive demand from consumers, and you're seeing regulators topping it off. So if those three trends continue to converge, you'll see the fintech region in the Middle East be one of the most exciting ones in the world.
Yeah, and before I let you go, what reality about the intersection of the Middle East, North African region with the emerging fintech space would you most want someone watching this interview to remember as they move forward in their own investment journey?
I'd say it's not priced in yet, and I think people need to come and check it out, and hopefully they'll realize what's out there.
Hisham Al-Fali is the CEO and co-founder at Lean Technologies, and we are very grateful that he took time out of his busy schedule to join us here at the New York Stock Exchange. Hisham, thank you so much.
Thank you.
Great to have you. Folks, don't go anywhere. Much more Taking Stock coming up after this, including the latest on startups, raises, and rounds, plus an interview with Jacob Sonnenschein of Barron's. More Taking Stock after this. Boom, let's do it, folks. Welcome back to the broadcast. Today, in the world of startups, raises, and rounds. First up, news with regards to crypto startup Zero Hash. The company raised over $100 million in a fresh Series D round led by Interactive Brokers, with backing from names like SoFi and Morgan Stanley. Puts its valuation at a cool $1 billion. Next up at this hour, early stage crypto VC Archetype closing more than $100 million for its third fund to bet on blockchain startups from social networks to crypto AI. And finally, on this Trading Tuesday, California EV startup Tello just raised $20 million in order to build the company's new mini electric pickup. It's called the MT1. It is a city-sized truck with 5 seats, a 5-foot bed, and a promised mile range of 350 miles. That's the latest you got to know in the world of startups, raises, and rounds. Let's talk with Jacob Sonnenschein. He's a Barron's Markets reporter. We're talking some stocks that I know are hot to trot for you, my man. Thank you very much for being here on the show.
Thank you for having me.
Do you mind me doing this, fixing your collar here? Because game recognized game.
Do whatever you need to do.
You would do the same to me. I had to stick it out. I want to start with some tech and software names that I know you're focused on, names like AMD, Palo Alto Networks, Adobe as well. What are you seeing in some of those top tech names these days?
One of the things that's really interesting, the first thing you just mentioned are chip makers and software companies. The reason is because I think we're still in, I'm a baseball fan, I don't know, maybe the third inning of artificial intelligence expansion. When you look at trends like the internet or smartphones, old trends, if you compare AI to those and you think AI is going to be somewhere around the impact of those, obviously it will be. We're not even in the 5th inning right now, so there's a lot more growth to come from both the software companies that are providing the software to all sorts of companies, and the chip makers that are seeing increasing demand for data centers.
And when you look at some of these companies that you may like or not like, are you looking mostly at the fundamentals? Are you doing some chart and technical analysis as well, or a mixture of all the above?
Well, I like the technical analysis to think about where's like a good entry point. I don't want my first move to be down 5 or 10% if something happens, but it's always fundamental. With advanced micro devices, one of the things I love about them, and the stock has really come back and the earnings estimates have started to stabilize. It was bad for a little while. AMD is a smaller version of NVIDIA. What AMD is doing is think about a data center chip market, an AI chip market that is hundreds of billions of dollars at maturity years from now. Think about AMD's sales, annual sales, probably not even $30 billion, and not all of that is AI chips. So if I think about the growth opportunity for AMD to catch up, I think it might even be faster growth than NVIDIA.
Yeah, a few other names on here as well, Arista Networks and Twilio. What should people know if they're a bit unfamiliar with specifically some of those stocks that you like in the tech space?
All right, so first with Arista Networks, because it's on the lines of that data center trade, and we were just talking about with AMD. Arista Networks makes networking and switches hardware for data centers. They're two of their biggest customers. It's a big portion of their revenue, so it's a little bit risky, is Microsoft and Meta Platforms. But Arista Networks, there are not many companies better at Arista in terms of making those types of products for the data center. So Arista Networks is on a very steep growth curve. And the second one you asked me about was Twilio. That's software. They enable companies to send messages and communications. It's an over $100 billion total available market. It's a small cap company, and Twilio, unlike its peers, doesn't send bad messages, and I think that they're positioned to take share and grow every year for a very long time.
Got some big health and biotech names as well I want to hit before we wrap. Boston Scientific, Amgen, Merck, Eli Lilly. What are you seeing in those names?
First of all, I like Boston Scientific. Amgen's got a little bit of an issue with Lilly, which we could talk about in a second if we'd like. But Boston Scientific is a really unsexy, steady business that probably will grow every single year, and it has grown over the years. It's a very large company. They're very experienced in making all sorts of products for surgeries. A lot of surgeries having to do with the heart. Unfortunately, there is an issue with heart health, not only in the United States, but globally, and Boston Scientific is best positioned to take care of what is growing demand from hospitals. They also are so big that they can do acquisitions almost every single year. They get bigger by acquisition, and one of the things I love about it, it's not so risky, these acquisitions, they can acquire a company and provide a greater and greater suite of products for hospitals to where I really don't see many companies that can compete with Boston Scientific.
Sure. All right, we got to leave it there. Jacob Sonnenschein, a Barron's Markets reporter, with a few of the top stock picks that he's following. Thanks for being here, my man.
Thank you.
Good to have you. Folks, after a quick break, Money 2020's Chief Strategy Officer Scarlett Sieber previews the 2025 Money Awards. Much more taking stock coming up. Boom, after this. Welcome back to the broadcast on this Trading Tuesday. I am now joined back here on the trading floor of the New York Stock Exchange by Scarlett Sieber, Money 2020's very own Chief Strategy Officer. This time, I have to do this for a live interview. Thanks for being here.
Yeah, thanks for having me. I get to be on the other side of the camera doing, the whole thing, so looking forward to it.
And we've been thrilled to have you here. So let's talk about top trends from this year's Money Awards entries. And what should people know about what's right behind us, the Money Awards this year?
Well, it's a very exciting day, JD, because the finalists have been announced. There were some definite big trends, surprise, all the things you've been talking about on the show today. AI, infrastructure, fraud, really big topics. Digital banking has definitely been a constant that we've seen about really serving underserved communities. And yeah, AI has been for sure across the board. There's been a lot of funding in it, as you know, and you talk about every day on this show. We're seeing that reflected in the finalists as well.
Why do you feel it is important for the industry to have this point of recognition and awards like this?
We've been thinking about doing this for a long time. So our sister brand, Cannes Lion, who is all over NYC, we see some great footage here, has been, is known for the awards. And really, there is not a global benchmark for what excellent looks like in the space. We have the great honor of having thousands of people and thousands of companies submit applications to speak on our stages. And we started seeing that, like, if you take the name out, it was kind of the same thing and over and over. So we really wanted to make sure that we partnered with world-class jury to say what good and great looks like, and set a real global benchmark of what that means.
I have no doubt when you look at something like this, Scarlett, you got a lot of amazing choices, incredible finalists. Any really standout finalists to you in this year's batch?
That's like asking me which one of my kids is my favorite. Correct. They're both favorite in different ways. I mean, we had 68 finalists from 13 countries. We had hundreds and hundreds of entries from over 61 countries. So if you think about somewhere like partnerships, it's really exciting. You've got Storefront and TikTok Shop talking about what they're doing there. You've got Clearbank and another partnership there. You've got so many great things. Banking payment startups, they're all amazing from all over the world. Alipay, Jazz Cash in Pakistan, MasterCard, you name it. Some companies had multiple finalist entries, including Osler, who had 3.
All right, and finally, before I let go, the new report with CB Insights. What does that reveal, and what should people know about it?
So CB Insights is a great company. We've been knowing them for a long time. I've been a big fan of them. They're the largest, private data company that exists, and they also have a lot of great public data. So we thought, what would be better than to partner with them to really give a deeper spotlight onto these companies, these finalists, add their mosaic score, and then also take a little bit of the sauce from the entry and let the world know about why they're so special.
Take a little bit of the sauce.
Yeah.
I love that. Scarlett Sieber of Money 2020, Chief Strategy Officer. Thanks for being here. I mean, you do an amazing job with the show day in and day out, and this time you get to have you down here for the NYSE
This is
part.
way more fun. Let's do more of this.
We'll do it again. We got under a minute left. Scarlett, thank you for being here. We'll do it
Thank
again
you.
soon. Folks, that's going to do it for today's edition of Taking Stock, live from the trading floor of the New York Stock Exchange. We are a bit lighter than usual for economic data tomorrow, but don't forget, as always, 9 a.m. Eastern, right here at the NYSE, New York Stock Exchange TV Live with Kristen Scholler, and FinTech TV Live with Remy Blair, both here, counting you down to the open. That's going to do it for today's edition of Taking Stock. We will see you again tomorrow. Woo!